Okay, this is a review of the live trade signals for Friday, April 27th, 2018. And what I want to do is walk you through every step of the way so that you understand exactly how these trades work. And then I'm going to break it down on how you could have traded it. So one thing that I need to point out is that in the LTS, as we call it for short, live trade signals, we don't teach you how to trade. We presume that you already know how to click buy and sell. And really, honestly, that's all you really need to know how to do. Yes, it does help if you have some other tools. And so what I'm going to try to do is give you some of those so that you have some ammunition as you go into this. But you really need to understand that this is really simple. Okay, so in other words, if we give a price for buying, it literally means we are buying at that price. If we send a price for selling, it literally means we are entering short at that price. And so I'm going to break this down for you so you can see how easy this is. I mean, really, it's so easy my 10-year-old can do it. I mean, it's not complicated. Okay, so I'm in Mountain Time Zone, and so all the posts that you see here are going to reflect that time. So if you want to take your charts and you want to, mimic this or whatever you want to do, just be sure to convert the time to whatever time zone you're at in the world. Okay, so the first post, as you can see here, good morning at 7:12, and then at 7:26 we get our first signals. Okay, so at 7:26, buying most aggressive 72. So we're not going to type out every single part of the price. So this is the ES. Price is trading at in the 2600 range. So 26.72, aggressive 70.25, 67.75, and conservative 63.75. Leave a pause for 8.5 seconds and explain that. Aggressive, conservative, or sometimes you might see most aggressive. All that means, it has nothing to do with you as a trader. So in other words, if you are a conservative trader, or if you are a really aggressive trader, this has nothing to do with you. This has everything to do with the trade. And so typically, we follow a rule of thumb. If the closer the entry is to where price is trading at, it's usually going to be aggressive. The further away, it's usually going to be conservative. Okay, and so that's all I'm going to say about that. I don't want to go off on a tangent into a teaching mode. I really want to get to the trades. So what I do and what you would do as a trader is you would enter those price levels onto your charts. I've already done that so that we don't have to waste time doing that. And so that's what you're looking at right here to the right. And we'll come back to this in a second. So what I'm going to do is I'm going to put all of those price levels, and you can color them whatever color you want to. It doesn't matter. What you want to do is put those price levels on your charts as in the form of a horizontal line. So it just depends on what charting software you use. You can use anything you want. You can use free charting software. You can use paid charting software. It doesn't matter. This one happens to be NinjaTrader. It'll work on anything. Okay, so any charting software should have some sort of drawing tools, and so all you need to do is put a horizontal line on your chart at those exact prices. Okay, so here's 72. Here is 70.25. Here is 67.75, and then all the way down here is 63.75. Okay, now you'll notice that I have these boxes. So what you're going to find out really quickly is that these price levels that we give out are insanely reactive to the market. Meaning that oftentimes you will see price go to the tick or even within a tick. So what we like to do is we want to be within a couple ticks of that price. You can play the line, as I call it, meaning you can put your order on the line. But when price goes to the tick of that level, there's a chance you won't get filled, and it could run, and then you miss out on 5, 10, 15, 20 points. And then all of a sudden, some traders get in panic or, chase mode, and that's not very wise to do. So this is what these boxes represent. So each box that you see is going to represent 2 ticks from the price level given. Okay, that's it. So at this time, at 7:26, as we saw on the post right here, 7:26 in the morning, that's when those price levels were given. So we already know we're buying off those levels. And so what I like to do is I like to put orders in already, ready to go. Now you can do what you want. If you have smaller accounts, then you just need to wait until price gets closer. So obviously if you're trading with a smaller account, then you're not going to be able to put a bunch of orders in at once. But those of you that have larger accounts, you would be able to do that. To start out, just start with one price level at a time. Don't be concerned about whatever price levels are given. Just focus on one trade at a time and then master the process, which shouldn't take you very long. Okay, so as time progresses, okay, we're ticking away, and so this candle right here would have filled you. So if you were within one tick of the line, then this candle at 7:29, which my time is the candle before market open, that you would be in. Okay, you'd be in long. Then very next candle goes to the tick. So this is a really good example of what I just talked about. To the tick of the 72 price. Okay, and then we run up. Okay, pretty hard. This ran up initially exactly 4 points. Let's see what the next candle did. 4.25 points. And we obviously started to head down. Okay, so people always ask me, well, where do you put your stop loss? Or, where do you put your profit target? So there's a video in the members area that talks about stop losses. It's a very touchy subject for a lot of people. And I'm not going to go into that because it's a very broad topic. But I'm going to tell you this, that I would venture to guess in my 18 years of trading, 95% of traders get slaughtered because they don't use stops properly. Okay, and this is not about stops, so I'm not going to talk about it. Their stops they're too arbitrary, and it depends. Every trade is different, so there's no magical, place a 2-point stop or a 3-tick stop or whatever. It's not how it works. If you want to be a trader and make a lot of money trading, you need to master the art of stops, using them, knowing when to use them and when to not use them. And yes, I did say not use them. But I'm not going to get into that. We have a whole video on that, and it's just there's too many details to really go into here. I want to get through these trades. Okay, so you'd be long here. So then, of course, the question is, where do you take profit? Well, in the trade room, we will give you exits that we are targeting. Now, here's the thing to understand about that. You can take profit wherever you want. This gave you 4.25 points, which on the ES is $212.50 per contract that you're in literally the first few minutes of market open, and it's really up to you. If you want to take a couple points, if you want to take 2, 3, 4, 5, it just depends on what you want to do. So we don't always give the exit prices immediately, because what you have to realize is that we are trading ourselves while the market's happening, and we're making posts. This is just one of our rooms. And so there's a lot going on, and at this point, sometimes we don't know where we're going to get out of a trade. And so this really needs to be up to you on how much profit you want to take. The important thing is to not panic in or out of any of the trades that you get into. Okay? So I'll show you in a second here. You'll see some green lines, and these are profit targets that we're looking to take profit at. So in just a second here, we'll see that. So what happens is price is starting to come back down, and now we have price hitting our next level. So I will at least give you this. If price has gone this far, 4.25 points, and we're working our way back down, there's no reason to lose money on a trade that just went, in this case, 4.25 points. So it's okay to break even on trades. There's no, like I said, there's no magic number. At some point, you're going to want to take trades off from here and there, and you'll see some more examples of this. So now this trade you're in, now you're long from wherever you placed your entry in here. Okay, so then the next candle forms and we break through, but before we broke through, we went back up to test this price level. Okay, so what some traders do is they'll, if you're trading multiple contracts, some traders will take maybe one off at the next highest price. So if we were testing this as support, there's a good chance that if we break down here and come back up to test it, it might act as resistance, which it did. Okay, so we got filled here. Maybe you take profit here. Let's say you didn't. Well, if you didn't get out up here, which personally I wouldn't have, I would not have gotten out, because when when you get into a trade, you have to commit. Okay, so as the market's developing, this one obviously it came up here for a couple points, and now we're back down past our entry. And so what do we have down here? We have another, this price level down here. So this was the 67.75 price, and we got a tick away from a potential entry. Even if you had your entry sitting at 68.25, which is 2 ticks above this, it's possible that you wouldn't have got filled, but we didn't get there. So either way, it doesn't matter. So you're still in this trade. Market's working its way out. It's making a decision. We've got some indecisive candles here, and then the next couple of candles just shoot up. Okay, so let's go back to the chat, and so I actually need to back up a little bit because I skipped this next part. I was too busy talking. So back over here, when we had at 7:32, which was this candle right here. So at 7:32 in the chat, 80.25 is TSP. TSP just means take some profit. So we're at this point, we're anticipating a good push up. So we have an exit at 80.25, and obviously we already know what happened because we just saw it. It did not make it there. Okay, so back to profits. So I colored those green. So anytime you see green, at least in this video, this is where we're going to target an exit. Okay, well, let's fast forward to where we were just at, because at this point in the chat we had a post at 7:46, which was one more candle. So this candle right here, oh, that's 7:47. So at this one right here, this green candle, we had posted 775.25 is a conservative take profit. So this, obviously, we're anticipating this going higher. Does it mean it will go higher? No, but we're anticipating that. But you have to realize we are now in from somewhere between 70.25 and 70.75. Okay, so here is this is a 5-point exit from this trade right here. Okay, and so as the market is developing, we get out of that trade at 7:49. So anytime that there's a TSP, it means that we're anticipating price to go more in that direction. Does it mean that it will? Of course not. And so if you're trading multiple contracts, you take out some of them at the TSP level, and then ideally, if the market's running, we're going to take the rest out, obviously at a higher level. Now, what happens when the market doesn't do that? Well, we're not going to waste money. So any remaining contracts, especially if it's moved, in this case, 5 points. So whatever you took out at 5 points, it might make sense to move the rest of your contracts up, I don't know, a couple points, maybe to this price level. I mean, it's really up to you how you want to exit the trade. But this one gave you 5 points on that exit. So as the market's developing, we're heading back down. So I'll cover that one in a second. So the question always comes, how many times can I enter these price levels? And the answer is as many times as you want, but you just have to realize that the more times that price, or in other words, the market hits these levels, the weaker they become. Okay, it can only take so much at any one of these given levels. Okay, so that's why you'll see I only have one entry per line hit. So anytime that price is coming to the level, then you're just going to see one entry, at least in this example here. Okay, so we've already traded this line, so we're not going to get in here. Obviously you could have, and we're not going to get in this trade again because we already did it here. We have not gotten into this one yet. Okay, so what happens is we would have been filled at 7:53. Next candle wicks past us. It looks like it's going higher. It starts to go higher. It hits this level. Okay, so we're coming up all the way back down to our entry. Now we're, at this point we're below our entry, but not by a whole lot, only by just over a point or so. So that's nothing really to be worried about. So I want to fast forward to right. Okay, so at 8:03, so on this green candle, we have this post here. There's a minor price at 66.25. So we are seeing the reaction off that, but if this doesn't get the follow through to the upside, we're going to put buying on hold. Okay, so in other words, if the market doesn't gain strength to the upside, then there's really no sense in continuing buying because it's showing weakness, and so we're going to want to flip to shorting the market. Okay, pretty common sense. So 1 minute later, 72, which was once our entry price to go long, now becomes, which is why we are now green, now becomes an exit. Okay, we're looking to take profit. So at this candle, at that exact time, it was posted that we're looking at 72 to take profit. So we're filled on this price level here. If you didn't get out here, then you're going to want to seriously consider taking profit at this 72 level. Okay, and so this gave you somewhere between 3 and 4 points. So between this trade and this trade, you're up anywhere between 7 to 9 points depending on your fill price. Okay, so by just after 8 o'clock. So in the first 30 minutes, between 7 and 9 points up, and that doesn't include, this assumes that you broke even on this trade. We were up 4 points, and then if you didn't take anything, obviously there's no sense in just letting it go against you. So I would have to venture to say that most traders would have just taken this off. Okay, especially if there was no target given. Obviously more experienced traders probably took a couple points. Anytime we figure statistics, we don't include we don't include this as a winning trade. And so when you look at all the stats, they're less than conservative. So just and hopefully you can see how that's the case. Okay, so this trade we're taking profit by this candle. So by the way, exits work the same way. So when you get into a trade, you're going to be 1-2 ticks above the line if you're long, 1-2 ticks below the line if you're short. And again, you can trade the line, but you just have to realize that there will be plenty of trades that do not fill you because it goes to the tick. Okay, and so likewise on exits, we still want the same thing. We're going to want to be within a tick or two to exit the trade. Okay, so obviously a couple candles later, it would have been a guaranteed fill if you did trade the line. That was a beautiful trade. And then remember, you can trade these as many times as you want. You just have to realize that the more times price gets hit, the weaker these price levels become, because the market's exhausted itself testing these levels. Okay, so here's basically an identical trade. You could have got in there again, took profit at the same exact price again, got another 4 points. So now you're up anywhere between 11 and 13 points. Okay, so I wanted to talk about this because this doesn't happen often where we give a price like this. So if you go back up here, this 66 and a quarter, this line here, this is not necessarily a tradable line. I mean, you technically could trade it. This is what we're looking at here, is we're looking for price to either gain strength off of it and continue in our expected direction, or to show weakness and then just continue in the opposite direction. And it's fine. If it goes down, it doesn't matter, because then we just switch our plan, and then now we're looking for shorts, and we'll use the same prices to go short. So this, remember, from all the way from 7:26 in the morning was a conservative entry. So we presume that you would have traded that. So obviously this one blasts right past it. So if we are looking for price to have failure through here or strength, and if it has the failure, which it did have, and if this trade is not working out, then you're either most likely going to take a loss here, or if you held on to it for whatever reason, you most likely got out somewhere close to your entry. So from a statistical standpoint, we would actually consider this a losing trade, just to be fair for statistical purposes. So this is probably, we consider probably a couple point loss on this one. Okay, I know traders that traded this, they did not lose. They actually made a lot of money on this trade because they held it. But my guess is that most traders, that especially if you're new, you're probably going to trade this, and you're probably, especially after 10 minutes of the market doing this, you're probably just going to pull out and, okay, next trade. Okay, so either way, couple point loss, break even, and then for the ones that have more experience, obviously they made a little bit more money on that. So then we fast forward to 8:50, And at 8:50 there was a post here. This was actually the last post of the day. So not going to do anything more here today. Been choppy today. Won't be around to monitor it. So won't be posting anymore. So at some point, you know, whether it's within the first hour, within the first 2 hours, this day was about an hour and a half that posts were made. Sometimes we'll give you kind of an outlook. You know, if you're going to continue to trade, this is what you can watch for, and then you can trade accordingly. And if you don't want to trade past that, then you don't have to. So we wrapped it up. Basically, if we take out the swing low at 60, so down, so that was posted here. So at this time, at my time, 8:41, we had a low of the day at 2660. So if we take that out by much, we're going to go back to 2636, at least in the bigger picture. So what that means is that you have to realize that we have to gain strength. If it's going to show weakness like it did earlier in the day to the upside, if it's going to show that same type of weakness to the downside, obviously it's not going to happen. Okay? So if you want to be aggressive, you could use the exact same levels that were posted for buying. So all these levels that are blue that we were buying at, you can now use them for selling. Okay, and then the last comment here, that 60 may be the low and maybe 58.5. So you're going to see a couple purple lines here. So at 60 and then 58.5, it might be the low. So this is kind of more of an advanced thing, and it's not something that we really teach, but it's kind of common sense. If you have an expected low, or at least a potential low at any given price, what would be the logical thing to do? You know, especially if you're at this point, if you're up 13 points, which you should be. If you're up 13 points by this time, actually, you know what? Let's just say 11. Let's say you missed out. Let's say you took the 2-point loss, and let's just and let's say you broke even on this. So you're up 11 points on the day, and there's a potentially expected low at 60 and or excuse me, at 60 or 58.5. What would be the logical thing to do? How about test that? Why don't you, throw in a contract or two and test that low? Put a trade on, see if it works out. If it gains strength, then you're going to make more money. If it's going to not gain strength, then obviously it's not going to work out. Okay, so each of these levels now, so they're blue for buying, red now for selling. So that's what these red boxes are. So you would have put a short on at this level here, right? So if you were long here, maybe get out, because this has the potential to go down. It might not go down, but it has the potential to. So let's say you played the 58, and let's just say you put it at 59. So you're at 59, and then you're going to get out at 63 and a quarter, let's say, which obviously would have filled you. So there's another 4 1/4 points. So now you're up 15 1/4 points, if you kept going, obviously. Okay, so you're at 15 1/4 points. And this trade, well, actually, let me do this. This trade went one tick past it, and then the next candle, it looked like it was going to go, but obviously it didn't. And look what happened. We're testing this price level here. So this is one of those things where it's like, okay, well, we have this price level that we were watching for the breakdown, which happened, but we didn't have any follow through down here. So now we're testing it as resistance, and let's see if this is going to come back. Well, it went to the tick. It's coming. It looks like it's going to go, right? Okay, it looks like it's going to go. And okay, now we're starting to go green. We couldn't fulfill a new low here. So you've been in this trade now 9:01. You've been in this trade 7 minutes, and for most of the time it hasn't worked out. So at this point, most traders that trade this way would just take it off. You're either going to be break even, couple tick loss, maybe if you're lucky a couple tick profit. But you're most likely just going to take this off and just wait for the next trade. So then now you have an order up here, right? Because now we have this level that was for buying. Now we're going to retest it for selling, right? So we got an order in here, okay? And market progresses, and we obviously get filled. So there's no targets given because we're done with the room. But what I said in the beginning, you can use these levels because they're highly reactive. You can use them at any point for exits. So if you're in a trade, now it's time to just, scalp profit out of the market because it's moving. Okay, this one's really having a hard time with this price level that this is kind of our tipping point here, and it's just at this point it's just kind of flat and sideways. Okay, we're trying, not having success. We're trying. So likely in something like this, that's just, we attempted one attempt here to go lower, another attempt to go lower. Okay, it's time to widen out, as we say. Time to go to the next trade. You take this one off. If you didn't get any profit here, you break even again on this one, and now we're going to widen out for the next one. So now we're going to go long, or excuse me, and now we're going to go short here. Okay, so we have an order placed here already, ready to go, and we get filled. And this one's starting to work out. Okay, so we're up a couple points. By the time it gets down here, and it's attempted to go back, and now we're finally having follow through. So here's our line again. So you just have to realize also that even though we have this line here, that pertained back here, and we already had that fulfillment that happened here, and we already had this here. So even though this is not necessarily a line that we trade, this kind of becomes old news. Okay, we're done with this. So at this point, now what we need is follow through either to the upside, or we need follow through to break the lows of the day to the downside. At this point, we're just going to play short. Okay, so now, if you have your exit a couple ticks or a tick above this line, if it gets down here, which it did there, you're definitely out by this one. Okay, and you're obviously out by this one. Okay, so now you're out. So this trade here, if you played 2 ticks below it, okay, that one gave you 5.5 points on whatever contracts you didn't take out when it hit this one. Okay, another 5.5 points. Now you're up. Well, I think we were at 15, so now we're pushing 20, or maybe a little bit more than 20. So now you're 20 points in the first couple hours of the day. Okay, are you still going to trade? Yeah, you can. So the question becomes, sometimes people will ask, well, can I buy this again, even though it's, we tried to sell, it didn't work out, can I buy? Well, of course, but remember, the more times price hits these levels, the weaker they become. There's a caveat to that. On days where we have sideways markets, what you'll notice is that they bounce off of them all day long. So you can try it. I mean, at this point, you're up 20 points if you just trade the trades that we've talked about. There's no magic here. There's a specific price. You put in a short order, now we're short, and you put in a long order earlier, so you can afford to risk money at this point. It doesn't mean that you up your contracts. It just means that you can afford to take a little bit more risk because you're up so much. Okay, so you're over $1,000 per contract that you've traded. Okay, so if you try that, then obviously this one goes to our test level. It goes to the next level, which is, as I mentioned twice already, where you want to take some profit. Okay, so there's another roughly 3 to 4 points. So now you're up about 23 to 24 points on the day. And so remember, these are for selling now. So we're even though we're heading up, we have to have follow through past really this price level here, because that's our most recent major high in the run from our low. So we're going to have follow through in order for the price to go higher and us to start buying. Okay, so you're going to short this again. Okay, this one actually takes a while. By the time you get filled here at 10:03 my time, and we're now at 10:30, so 27 minutes to sit through this garbage. And it's possible you just got sick of this and just took a couple points. By this time, it's looking like it's going to start to head up, and we came down. And if you held it, obviously you got another 3 to 4 points. Okay, and then of course, if you wanted to, you could test this for buying. Okay, and remember, why was that? Well, it's because we failed here. Okay, so anytime resistance fails and we have a decent break to the opposite side, if it comes back down, there's a likelihood that it's going to test it. Okay, so now you can buy it. Okay, so even though I have this colored red, we're going to test that for buying. And you're up 24, 25, 26, whatever that, I lost count at this point. So you're going to test that for buying. And you can afford it. And you just made another 3 to 4 points. Okay, So we're still on sell side, even though we just potentially bought that. We're still on sell side. You can try this. If you did, obviously that didn't work out too well. So you're going to lose a little bit on this. You would not have broken even, because if you're going to be short down here on this line here, it never came back. So I would hope that somewhere in here, especially if we got up here. So if I was going to do stats, which this is not included in our statistics, the 11 points that's included in our statistics, and hopefully you can see that that's very realistic. So this would be, I would consider this a 2-point loss. Maybe you took a point loss, maybe you took less than that, but you're definitely not going to take more than that. Especially if we're going to get to our next price level here. So you're going to, we're going to have a short here. So remember, this high here, we need to have some pretty strong follow through. We have this as resistance, but so this is secondarily what we have to overcome. The market has to overcome in order for price to continue higher. Okay, so we got just sideways. The market's just not moving very much. And so we're trying, we make higher highs, we're trying, we come back down. So, you kind of sit through here, back and forth, positive, negative, from 56 my time to 13. So about 17 minutes or so. And then we climb higher. I mean, it's only 2 points down at this point from the high here. So it's not until we, come back down that we finally fulfill that. Okay, so you could try a buy here. So if we're going to continue higher, then that means that we broke the resistance on this candle right here. You could try a buy here. Technically, you could have tried to buy here. So if you were not short here, you could have tried to buy here. Okay, so you kind of get the picture of how this works. It's just a constant test of these price levels over and over and over again. And you could have got long here. So obviously this long didn't work. You could have got long here, and this one took a little while. You probably wouldn't have got filled here. You might have got lucky and got, if you were 2 ticks below, got there. Either way, you would have for sure got filled there. So there's another couple points. Obviously you could have tested this for short again. So if you look at something like this, so we failed to go higher here. This was the high of the day from that range, from that run up. So we failed to continue. We didn't have follow through. Instead, we got a run down to test these levels again that we just reviewed. So if we are going to continue down, then what's the logical thing to do? The logical thing to do is to test it for shorts. So you can put in another short order here. You may have even got filled here, and then you would have got profit here, and then you could have done it again and then made profit there. So I don't know what we're at, but I don't know, 30, we're over 30 points now for sure. And then so you test this again. Okay, so you're out here, you test that again, now you're short, this one doesn't work. Yeah, so you're gonna take your couple points there, you're gonna go short here, this one doesn't work. So if you didn't get out, obviously you would have lost some money. So these probably cancel each other out if you didn't break even on it. You're going to test this one for short. This one obviously works. This long doesn't work. This one doesn't work. And check that out. We hit our price minus a tick. And then it just goes back and forth here. There's too many trades in there. But there's probably another 2 to 6 points in here depending on what you traded. And then this one here obviously worked out. And then market's closed by that point. But so technically, this is a very long video, but you could have traded the whole day. And there's probably about 37 points with those few losses, that we figure a couple points maybe that you took. And remember, before, by the time the posts were done, you should have been up around 11 points or so. Some of the more experienced traders, 13, 14, 15 points. But 11 points is very realistic for these price levels and just trading them that way. So in recap, in this long video, price level is given in the room. Buying means buying. It means we're going to buy off of a specific price, and those price levels are given. This particular day was not as volatile as we would have liked it, and we didn't have as big of runs as we would have liked, but that's the way it goes. So we never had targets that were further away, 15, 20 points away that got hit. We had that target that was way up here, our 80 and a quarter, and it got nowhere near that. So does that mean we just sit there and wait for price to get there? Absolutely not. We have to manage the trades while we're in them. And although we don't teach a lot of trading, it should be very simple and straightforward. So buying means buying, selling means selling. You can get out wherever you want to get out, but these prices are insanely accurate. So even though this day wasn't, a day that just kept running in one direction, you can still pull very good money out of the market. And in an hour and 20 minutes, which is how long the room ran from market open, you've got at least $550 per contract that you could have extracted relatively easily, even with a loss and even with a break even. So remember, I did not include any profit in this trade, and we counted this one as a loss. So every day is different, but it's really the same because, again, we have the prices, and we're either going to buy or sell off of them, and then we're going to target, if we reviewed a different day, then we would have hit our TSP levels, these green levels, and then we would have had a TP level, which is a take profit level, which means get out of the trade, and then we're going to go to the next one. But this is repetitive like this, day in and day out, and that's exactly how this works. So because of its simplicity, it really shouldn't take more than a week. What we would suggest is practice this for about a week on a simulation account. If you feel like you need longer, then take longer, but when a post is made, you just simply put the lines on your chart. You don't need to do these boxes. The boxes just represent where you would have an order ready. So you can place limit orders. You don't necessarily need to get in at market. I mean, if price is getting to a level and you didn't have an order, you technically could just get in at market, but because they're given in advance, you have plenty of time to put a limit order in, and that's it. It literally works like that every single day. Price level's given, put the lines on your chart, you put the order in, and then that's it. And then you just let the market do its thing. And we'll do it all over again the next trading day.